Good morning, Paul Georgie from Allendale. It's January 9th, Wednesday morning, and grain markets have been fairly quiet overnight in a narrow range. Traders, I think, are trying to get positioned here and waiting for this USDA report that's going to come out on Friday at 11 o'clock. Remember that, 11 o'clock, it's a new time. First time they'll be releasing major reports at the 11 o'clock time frame. So other news in the markets here this morning, we've got South American weather that seems to be favorable at this time. Weather forecasters are putting more rain in the Brazil growing region here next week, and some people are trying to say, well, that could slow down harvest somewhat to improve exports and drive buyers back to the U.S. But in reality, the price of South American soybeans versus U.S. Gulf beans are considerably cheaper, and buyers will continue to move toward that South American area for purchases over the next several months. South Korea was a buyer of some soybean meal overnight, 45,000 tons, 55,000 tons of feed wheat, and 69,000 tons of corn, and all optional origin, all of it expected to come out of South America. We had CONAB out of Brazil give their estimates on production. They raised their soybean production up to 82.7 million metric tons, and their corn production they raised up to 72.2 million metric tons, which are pretty close to being in line with what the USDA numbers had last month. China also increased their corn production by about 7 million metric tons in their forecast here overnight, and not a big deal, but because that's what it brings it in line with what the USDA has been forecasting here for some time. Of course, the big concern is what is the USDA going to say on Friday. The wheat planted acres is one that is a focus, and expecting an increase there. Trade average is about 1 million to 1.3 million more acres than planted last year. Ending stocks on corn, trade seems to be right in that neutral category there, increasing soybeans ending stocks a bit, and lowering the wheat ending stocks. The big question is going to be harvested acres. That still is, what is the USDA going to do? Allendale feels that that harvested acreage percentage, instead of 90.6, should be somewhere around that 89.2 area. So we're expecting a drop in corn harvested acres as well. But the USDA is always full of surprises on these January reports, so expect the unexpected when preparing and positioning yourself ahead of this report on Friday. In the livestock trade, we did have some cash cattle trade yesterday in the south at 128. A few cattle traded there, and we had a few cattle trade in Nebraska at 205 on the dressed basis. Still, trade was expecting a 129 cash trade here this week, but we haven't seen that just yet. Cutout values were a little higher yesterday, up 49 cents in choice, select up 71 cents. The pork complex under pressure here overnight. We're down anywhere from 70 to 90 cents in the hog futures. I think some of that is because when late yesterday the USDA gave us the Iowa, Minnesota hog prices, and they were down sharply over $2, and that created some nervousness there. Cutout values were down only 63 cents in pork yesterday. So expect volatile trade here for the next couple days as we go into this report. The technical pattern and rebalancing are still extremely important in all markets. We did see a big volume of trade yesterday on the close in the grains. Expect that today and for the next several days as the funds, the index funds rebalance. And then we've also got Goldman roll taking place in the livestock trade that creates some volatility there. So I think the most important thing is be prepared for the unexpected, and call Allendale's research and Allendale staff. We're happy to give you some ideas on how to deal with it. So you can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.